What's going on, guys? My name is Richard and welcome back to another stock market outlook video where each and every week we try to determine the current trend of the market based on the price action of the major indexes as well as the leading growth stocks. So we'll go through the technical analysis of these major indexes as well as how my previous watch list, which I post every single Sunday, performed over the course of the week. And then we'll round off the video by talking about the Ibd Big Picture article as well as the GMI signal from wishingwealthblog.com. And if you enjoy this video and appreciate my analysis, please go ahead and leave a like down below and subscribe if you're new to the channel. But getting into it, let's start with the NASDAQ on a weekly time frame and talk about the overall price action. So overall, you can see that the NASDAQ was up 1.5% on the week and the close was right near the open. And this is usually a sign of consolidation and is constructive. But you can see a lot happen this week because of this huge tail right here. And we'll definitely get into the big shakeout that occurred last week. But overall, nice consolidation and up 1.5% for a positive week. Next, taking a look at the S&P 500, you can see that overall it was up a little bit over 3%. And you can see it had a nice closing range in the upper third of the trading range. And you can see that actually reclaimed the critical 30-week moving average, which is this red line right here, which is very critical for me because it kind of represents that it's now out of a stage 4 decline based on Stan Weinstein's stage analysis. So this could be the start of a stage 2 uptrend if this 30-week moving average starts to curl up. So I really am encouraged by the fact that we're no longer in a stage 4 decline on the S&P 500. Moving on, we've got the Iwm the Russell 2000 Index, and it was also up strongly last week, almost 3% on the week, but it was slightly weaker than the SPY because you can see that it closed below the open. But overall, it was a constructive week, and it's nice to see the small and mid caps contributing to this rally. So moving on, let's talk about gold on a weekly time frame, and overall, you can see it was down slightly, down 0.18%. But you also had a nice shakeout just like the NASDAQ, and overall this is constructive. And you can see it's still in this very tight range, so we could see a breakout to the upside or to the downside very soon. And taking a look at the Vix the Volatility Index, you can see that overall we were down a little bit, 2.31%, and we're now down to 2751. And anytime the Vix is down, I think it's constructive for me and all trend followers because that just means that there's a lot less surprises and it's easier to find those trends and ride them. Moving on, we've got the XLF, the financials, and it had a very strong week, up 6.8%. And a lot of money that actually rotated out of the growth stocks early in the week actually went to the financials and the other kind of lagging stocks like airlines. So it's nice to see the XLF contributing to this rally. I've talked about that a lot in the previous weeks. I want to see the financials contributing to this rally, and that way overall the entire market is kind of moving up as a unit. And lastly, I want to talk about the FFTY, which is very similar to the NASDAQ. You can see a big tail right here, and overall it closed right near the open. And overall it was up 1.39%. And once again, I think this is constructive, good consolidation, and should set up a lot of charts for success in the coming weeks. So now we've talked about the weekly charts on all these major ETFs. Let's go ahead and take it day by day on the NASDAQ and get a better sense of how this week went about. So overall on this Tuesday, which was the start of the week because it was a shortened week, you can see that we gapped up strongly, but then had a huge drop over the course of the day, which is definitely a negative for me. And a lot of stops were getting hit. A lot of growth stocks were performing very badly, down 5-7%, and overall not a good week for growth stock investors. But we did only finish down 0.27%, which avoided a distribution day, which for me was really the only positive with this day. And the expectation going forward into Wednesday was that we continue downward. And at the very beginning, that was the case. We gapped down slightly and then moved downward, but we had a very strong rally and actually closed up 0.55%, which was very strong. And overall, we closed right near the top of the trading range. And once again, the expectation was we continue higher. But on Thursday, we gapped down slightly, which isn't really a negative. I would actually prefer a gap down than the huge gap up that we had on Tuesday. And overall, we tried to go higher, hit the upper Bollinger Band, and that got knocked down right back to almost the close of the previous day. So kind of stalling action here, but still nothing to cry about. And overall on Friday, we gapped up slightly, moved down, but then towards the end of the day, really ripped into the close after some positive news. So a lot of growth stocks really rallied hard on Thursday and Friday after those negative first 2 days. And overall, once again, I think this is a nice consolidation week and a positive for the overall market. So now to round off the indexes, I want to go through each of their Guppy charts because I think this is such a helpful tool and really helps remove that bias and instead look at the trend that the index is in. And this is the NASDAQ, and you can see we've been in a strong red, white, blue uptrend since really the last couple of weeks and starting on the 22nd. And if you're not familiar with what a Guppy chart is or a GMMA chart, you basically have some short-term exponential moving averages in red and longer term in blue. So basically, if a stock is trending up, the red will be all above the blue. And if a stock is consolidating, the red will be very close together and hopefully still in a red, white, blue uptrend. So overall, the NASDAQ is in a strong red, white, blue uptrend. The SPY has just started its red, white, blue uptrend because it was lagging behind the NASDAQ slightly, but this is the start of a strong red, white, blue uptrend. Taking a look at the IWM, it actually also started a red, white, blue uptrend, which is very promising because it's taken a while to get back to this point from the market lows. Taking a look at GLD, you can see it's also in a red, white, blue uptrend, but you can see it's consolidating right now as all the red EMAs are very close together. Taking a look at the VIX, you can see it's now in a blue, white, red downtrend, so that's always good to see as a trend follower. And next, taking a look at the XLF, you can see it's not quite in a red, white, blue uptrend, but it could get there very shortly. And lastly, with the FFTY, it just started a red, white, blue uptrend and has been consolidating a little bit the past couple weeks. So those are the trends of the major indexes. And once again, I think it's very helpful to take a look at charts without those candlesticks, those OHLC bars plotted, because once again, that's a little bit noisy. And just taking a look at the moving averages really helps you narrow down and find that trend. So I think it's so helpful to do that, and I encourage you to do that on a daily basis. So next, let's go through how my previous watch list performed. And if you don't want to miss my next watch list, which I post every single Sunday, go ahead and make sure you're subscribed down below to the channel. But overall, let's sort by the weekly change, which is the change from the open of the week until the close. So overall, I had 14 stocks on my past watch list, and 7 out of those 14, so 50%, made money from the open until the close. And I think this is a little bit lower than usual, but that's kind of normal because of that huge shakeout that we had in these high-flying growth stocks. But our best performer was REGN, which I talked about a potential green line breakout. And let's actually show that right here because this is pretty textbook. And you can see the huge volume coming in and this nice reversal after it got knocked down with the overall market, but a strong reversal on higher volume, a green and blue dot together, and a strong green line breakout on that Friday. So this is actionable early next week, and I'll be looking to add if I see follow-on volume on Monday and Tuesday. PCTY also did pretty well, and you can see it actually fared very well on that Tuesday and Wednesday, showed really good RS, and it had a very strong Friday, finishing right near the top of the trading range. However, moving down, we've got some bad performers. We've got Chegg, which was my stock of the week, and overall it was down 7% on the week, but it never really gave you a chance to get in. So you have to wait until a nice low risk, high reward setup. And right now it's actually forming a nice one here, right near the low of the Bollinger Band as it constricts. So I would look to see a move up on volume early next week. Moving on, Dexcom was also one of the stocks hit very hard last week, down 5.79% on Tuesday and a further 5.8%, although at a point 10% on Wednesday. But you can see a nice positive reversal here as it went down close to its 50-day moving average and then rallied strongly. And you had a kind of stalling day on Thursday, but then a green and blue dot on the same day on Friday. So this is one I'll be looking to get back in early next week if it acts well and increases on volume. So that's a brief summary of how my watch list performed. And now let's talk about the Ibd Big Picture. So going over to investors.com, you can see that the tagline for their Friday article was why the S&P 500 took over market leadership. And you can see that they say that the stock market climbed for the second straight week, although it didn't feel that way for many growth stock investors because things were hit very hard early on in the week. And they talk about the rotation a little bit away from the growth stocks into more cyclical names such as utilities, industrials, real estate, etc., etc. But overall, the Russell 1000 growth rose 2% on the week, so it was actually pretty strong in the end. But the value jumped 4.4%, which outperformed. So you can see that the S&P 500 and value companies actually outperformed last week, although the NASDAQ and growth companies are still doing better year to date. And going down, you can see that they talk about how the Ibd 50 is slowing due to some bad performing stocks in the index. And overall, they also talk about the China influence to the market. So stay up to date with that news. But overall, we are in a confirmed uptrend and only have one distribution day on the NASDAQ, which is very low. And it's likely that the current trend continues. Moving over to wishingwealthblog.com, you can see that the 36th day of the QQQ short-term uptrend was this past Friday, and we're still above that key 30-day moving average, and we have a green GMI signal. So overall, in my view, we are still in a confirmed uptrend, and I'll still be at this time aggressive and looking to add longs to my portfolio. So thanks so much for watching. If you enjoy my analysis, please go ahead and leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos.